All righty, welcome everyone. Welcome to the Hurley Investments Market View Commentary. This is the second to last one for the year. We will do next week's and then we take 3 weeks off. So Keeve and I can crunch as many numbers as possible, looking for next year's, newest investments to make sure our numbers are still okay for our current investments and to make sure that we still see that upside potential for the stocks that we want to trade. With that said, as you can kind of take a look, inflation on the Fed's chair mind, it's here in our big picture. We're obviously going to have some pretty heated inflation numbers at the end of the week. So let's just make the comment that, let's make sure I have what I want it. Let's get it all the right size. Let's change it to Times New Roman, and let's change it to 16. So, and let's bold it, huh? Let's make it bold so we can see everything. So my belief is inflation looks like it is here to stay for the next 2 cycles of earnings. Minimum. That comes because bottleneck, supply chain, and mismanagement of the Fed rates, right? So if we are in this position, what does well in the stock market? And I think it's a pretty simple answer. Some of you might have to go around a while before you can remember. But what's going to work in what does on the stock market, and I should just put it this way, right? With rising inflation. So, all right, you guys tell me, what do you think looks well in a rising inflation market? A good investment guru. I like that. So what Bill just said is someone that studied past history and is looking for opportunities. What is a good investment, though? Give me some guesses. I want you guys to look at some guesses. What's going to be a good investment in a rising interest rate environment? So 2, 3 just came in: commodities, food, and futures. So you're saying everything goes up. So it's interesting because commodities, in rising inflationary rates, commodities and or food typically does not head up. In fact, it becomes more expensive to produce those items. But in a rising inflation market, I could say God, I can't, I just brain fart here. I'm trying to do precious metals. And I completely forgot how to spell precious. But I'll get back to it. Precious metals, financials. Good thing my spelling is doing so well. Thank you for helping me spell, Maud. I'm a little bit tired. Precious metals. And the last one, which is unique, I see a couple of you put banks in there. In all honesty, usually consumer discretionary or consumer staples does not do well because we need to buy it and we're going to pay more for it. And the company is also going to pay more to produce it. I'm just going to say those stocks that can hold pricing power. So let's go through a couple thoughts because I think it's kind of interesting. Does Apple have pricing power? If they raise their iPhones up another $100, are people still going to buy those iPhones? Most likely, yes, right? That's funny. Maud and Mary both typed in no. Unfortunately, they do. It's amazing what people are spending, and I fall into that as well. Another thought process here. Disney very easily can raise their pricing from $6 a month for their Disney movies up to more. I mean, they could raise it to $9.99 and people would still pay for it. It's shocking what we pay to go into a Disney park for a day right now. It just blows me away. Well, Kevin, they're not growing as fast. I understand that. But if you're like me, we would pay $12, $13 a month for Disney because it's a cheap babysitter for hours with the kids. The kids are all over Disney. I'm not so much. I wasn't too impressed with it. I kind of saw what I wanted to see. Not much has come on that catches my eye right now. My kids are on it all the time. When you're looking at some of the other stocks that we would look at or that would be paying attention to, Micron, or for that matter, chips. Manufacturers would be okay. I wonder if Gupta's here today. Let's see. I don't see Dr. Gupta. Something that kind of scares me with pricing powers would be pharmaceuticals. They always have pricing power. They're always gouging us, right? Pharmaceuticals have pricing power. Banks / financials. Credit cards are going to get to charge more. The spreads are going to open up for banks. We should be in good shape. Financials. There's a swing on financials, right? Right now, financials are looking like the ones that are going to do relatively well. MasterCard, Visa, PayPal. I'm going to go so far as to say Square should, but they bombed their earnings. I mean, it was really bad. Their business seems to be all small business. And small business is not recovering so well. In fact, to miss by 20% on their revenues looks like it could be a problem for Square. They're going to have to They're going to have to rebrand themselves as more than just a small business. But it's interesting, out here in Utah, I see more and more Square being used. Watch Square become a takeover target sometime here in the near future. And if you're going to have MasterCard and Visa, you also have to put in there Discover Financial Services. Discover Financial Services, I think it's AXP probably, right? American Express. Pretty sure it's AXP. Haven't traded that for a while. So that's what we're looking for coming into next year. Out of curiosity, is the Christmas rally over? What do you guys think? Give me a quick yes or no. Do we have a Christmas rally or is it over? Christmas rally alive or is it dead? Mostly over. Dead. Very mild Christmas. Now remember, so I might stick in here that it's dead, right? What about the Santa Claus rally, which is from what? It's from December 26th through January 3rd. Will that be alive? I'd probably say as well, probably not, due to tax selling reasons, right? It seems like people are going to be selling this year because of the fear of higher taxes next year. I mean, let's face it, the market's up 22% now. We're good. Market's raised enough. In fact, more than anything, you could see a 5 to 7% drop in December to take profits now for tax reasons. It's difficult. It's really difficult to find a direction. It's difficult when you have a chart that 2 days ago was bearish and breaking the 200-day, and then in 3 days, it's testing the 50. Indexes were never made to move like this. Moving this quickly, very difficult. Not expected. Most definitely, we have a bearish Dow Jones. Watch tomorrow be a down day and watch it go in between what we had. Well, watch it go between the 50 and the 200 as it can't make up its mind what how do I say it? I'm not saying it right. I'm actually a little bit preoccupied. It's probably going to range between that 50 and 200 because the market doesn't know where it's going or what it's trying to do. We look at the S&P 500. Pretty neat. It is bearish. But the 50-day simple moving average is holding. Remarkably so. Talk about pivot points. It's bounced off of the 4503 pivot point twice now. We go down one more, we'll probably pass through or hit a triple bottom, and we either get a bounce higher for the end of the month, or we're going down to the 200-day. And the 200-day really is that drop of 7%. And all I'm doing to come up with that, how I said we could see that 7% drop. Some of you are like, Kevin, where the hell did you come up with 7%? You know, how are you figuring we've got a 7% drop if we don't hold the 50-day? Take 45.91, subtract 43.09. I'm going to take 45.91 minus 43.09. Comes up with 282, right? Divide 282 by where we're at, 45.91, divided by 45.91, 6.14. That's how I came up with we might have a 5 to 7% drop. It looks more like 5 if you were using the 50-day, which was 45.47. So for those of you that wonder and sometimes go, I mean, Kevin, where do you come up, right? Kevin, where did you come up with this? Oh, a 5 to 7% drop. I don't just pick numbers out of the sky. I don't look or listen to someone else's garbage. I run my own numbers myself to give me an understanding of what we're looking at and why. This is where I came up with that 5 to 7% drop. Based on today's numbers, it's 6.14. And all I did is take a look at a chart. And I actually calculated Friday's close down to the 200-day. Is that making sense for everyone? Are you understanding where I came up with that? Hey, we could expect that 5 to 7% drop. Are you guys able to see what I've calculated to figure that out instead of just randomly throwing a number out? No, I didn't catch it on scene. There we go. I just had 4 yeses come in. Thank you, Jim, Dave, Mary, and William. William, I haven't seen you for a couple of weeks. Nice to see you again. All right, so that's where I've come up with those numbers. That's how I've said, hey, here's the near-term risk. That also coincides with about 11 to 12% pullback from our highs. Don't you guys clearly see the double top we had? Again, as we're going through it, no one mentions it, but clearly we've had a double top on the S&P 500. Of course, you have to wait till it kind of goes through to be able to go, double top, right? All right, here we go. Taking a quick look at the Nasdaq. It already had, as of last Friday, a 6% drop. It is also bearish. And plain and simple, we're looking and fighting for that S2 pivot point. Can't get above the 50-day simple moving average, which is that blue line. This is pretty simple technical analysis, but it can't get above that blue line. It seems to hold its pivot point. It very easily could bounce around that 14,419 200-day simple moving average, and that just coincides with other lows that we've seen and been at throughout the year. It's not like it's not like this is rocket science, right? This is just taking a look at where we've been and wondering if we're going to move higher or if we are kind of in the jitters right now. I will tell you, I'm excited to see our futures are up right now. Our futures have, let's see where our futures are at. Our futures were up when I started. Our futures pre-market, Dow Jones up 101, 0.29. S&P's up 11, 0.24. And the Nasdaq's at 31.5 or 0.2. I've noticed that it kind of doesn't mean anything till the next day, but it is, let's say it is positive to maybe get over the 50-day for a couple of our indexes. If I was to take you to one other chart that I'm looking at, it would be the VIX. I'm going to pull the VIX out for the year. Looking at the VIX over a year, this is the volatility index. In simple English, our volatility index just means the amount of movement of the S&P 500 over the next 30 days. It could be up or down. And primarily, we are at the highs of February, but what an undecisive market. 37.51, 30, 30, 28, 28, huge spike to 35.32. What an unusual market it's been. Talk about don't know which end is up. When you see the VIX look like a heart monitor, we have no idea what the government's doing. We have no idea about I don't know. I was going to say COVID, but the market has no idea. This is a simple chart just to show you the market has no clue what's going on. And anytime it looks like, what is it, heart monitor, EKG, if I'm saying that right, when it's this volatile up and down, up and down, up and down, clueless, absolutely clueless, which is, I'll be honest with you, is the way I felt through some of the year. Just hard to get a read on a market direction or where we're going. So, some things have protection and some things do not. If you'll notice a couple things I haven't put in here, which maybe I should put in here. Does Costco, Under Armour, or Ford have pricing power? Let's go over Costco. What do you think? Does Costco have pricing power? Now, a comment's just made, if my heart looked like that, I'd be in the hospital. Yes, usually, I mean, I get it. I get it. Bills give me crap. EKG looks like this, then goes side a little bit, you know. Our EKG looks like hypertension. I'm sure Maud will tell me, Kevin, it really doesn't look that way. So our stock market has hypertension right now. I get it. But what do you think? Does Costco have pricing power? Yes, no, maybe so. Not if people don't buy. Maybe. A couple people said yes there. I think Costco has pricing power as well. It seems to me that they've raised just a little bit, not only their prices in the store, but also I pay a little bit more than a couple of years ago for my business membership. To me, I think they have pricing power, and Dr. Gupta got me, because they have a reoccurring fee. And it does keep seeming to get a little bit higher. What about Under Armour? Retail does not have pricing power. Retail is just selling. No pricing power in retail. But does Under Armour have pricing power? William says, you Americans don't make sense. So the stores typically don't have pricing power. Target costs, Target versus Costco. Target does not seem to have pricing power. Walmart does not seem to have pricing power. Costco, a little different business model does. Under Armour, Lululemon, Nike. Those guys seem to have pricing power. They've been raising their prices ever so slightly. They've done very well through COVID, and, credit to Under Armour, especially since they get a lot of their stuff from overseas. Under Armour's actually raised some of their pricing on what I pay attention to, which is usually some outdoor gear, some snow, long underwear type of things, camping gear. Their prices have been up slightly, and I'm still finding myself buying it. What about Ford? Mon, that's a good idea. I'm gonna go over that in a second. Does Ford have pricing power? I think they've got a lot more pricing power than General Motors, Chevy. For 45 years, they're the #1 selling truck. Some dummy like me will drive out of my way 500 miles to go up to Casper, Wyoming to get the stupid Ford Expedition Max Platinum that the wife got for a gift this year. She did have to drive a Ford Econoline van for 13 years that the kids completely destroyed. And not only did I go all the way up there, I paid about $7,800 more than I should have because it was available. Holding off on my truck, but my truck has 292,000 miles. Go Ford F-150 pickup trucks. But boy, 100,000 people paid, what, $185 to get in line for a Lightning truck? Hopefully that'll make their turbo diesel a little bit cheaper for me down the road. But I somewhat believe these three have pricing power as well. So where I'm going at with this, pretty simple. I feel like our stocks this year were more of the dogs of the Dow, right? I went through it last week, showed you how a lot of stuff was down. With my research, and for the upcoming environment into 2022, I feel like I like the current positioning, should just say positions, and stocks we are in today. Yeah, I'm going to go spend the next 3 weeks checking my numbers. I'm going to go through and make sure that I feel, hey, I like the pricing power for Apple. And again, to go back on how I did that, I just had someone ask me yesterday, well, Apple doesn't seem fairly valued, right? So let me go one more time because I got this call yesterday evening. Someone asked, why are you still in Apple? They let me know. Don't you know Jeffrey's not in Apple? Kevin, why would you still be in Apple? And again, I'm going to go through the same conversation I had for them. For someone that does hardware, computers, software sales, what is a, don't want to quiz, what would you give as a relevant PE? Currently sits at 29. What would your forward PE be for Apple? Just so you guys can see one more time our numbers. There we go. And that's spot on. Between 32 or 35. 32 is more for a computer. 35 is on the low end for a software. I'm going to tell you somewhere between 32 and 34, especially when you bring in some of the other competitors and their PEs in this range. I feel it would be slightly higher than the current 29.48. If you take 32 and you multiply it by the earnings per share of $6.14, and it's amazing because I gave a range between 196 and 208, but if you take 32 times 6.14, you come up with 196.48. That is a reasonable low end price for Apple. If you take it and you multiply it by 34, 34 times 6.14, wow. $208.76. The gentleman I talked to works out in Chicago, manages $360 million. It was so interesting having the conversation with him. He's really a sharp character. But when I gave a price range, well, my target range for Apple is 196 to 208. First question he came out with, BS, where the hell did you get that from? Do you like Kramer and do you listen to Kramer? No, I do my own research. Well, how did you come out with that number? And I thought for a second, like, dude, you managed $360 million. This is kind of simple. This is basic, right? Go to FinViz. And it's funny because he nailed the PE just like you did there, William. 32 to 35. Same exact comment, right? Well, yeah, it seems like this. Well, it doesn't seem when you pull in Microsoft and Lenovo and you do some research on, the music, the Twitters, the other in that area, 32 to 34 is very reasonable. 32 times next year's earnings, 196.48. If we go 34 on the high side, I like to give a range because it's going to be in there somewhere. 208.76, right? Wasn't rocket science. Little shocking that someone that manages that amount of money didn't do a simple valuation themselves. But any number I throw out to you guys, my expectation is, especially knowing William now, right? William's going to be like, how do you come up with that? My job is to calculate these numbers instead of just throwing you into something because I think, because I want, because I wish, because I hope it can go up. Pretty neat. Rich Mormon said, wow, you've been talking about forward for a year and a half. And I'm thinking, Kevin, you're off your rocker. And boy, it ran right up to 20. And it wasn't because I was lucky. I just did this simple valuation. Well, Kevin, Under Armour to 42? Really? Not only does it work on evaluation metrics, but it's a previous high. I still remember you guys with Bank of America. Kevin, it's never going to get above 35. Well, it kind of like was between 42 and 44. Those were our numbers that we were calculating on Bank of America. 35 wasn't enough. And it's pretty interesting because now you look at Bank of America and apparently we were pretty conservative because it did get up to 40, 48, 46. But between 45, 60 and 41 is the 50-day and the 200-day. You know, got a little more juice because we're going to have higher interest rates quicker. Higher interest rates quicker means a little more juice, let's face it. So it's some pretty simple math, and this is what I'm going to do for the next 3 weeks. Steve and I are going to go through what we trade. We're going to look for new opportunities. We're going to try to find those undervalued stocks. Same thing Buffett does, right? We're going to try to find those undervalued stocks and find a way that we can look for some new opportunities. There are times we're going to be wrong like Square. Right now, we are wrong like Square. Thank goodness. We capped the upside with the short call. Thank goodness we have a huge credit where we can capture over 80% of it. That's going to pay for our chance to dollar cost average, our hedge of that short call, capping it at a higher price than where it was currently at. It'll be interesting to see if small business can come back next year. In all honesty, if we get build, bigger, better, build bigger, better through, there's all the money you need for small business to get another run. Hell, 1.7 trillion is going to cost about 5 trillion over time. It's sitting right there. So this is what we're doing to figure out where we need to be and how we're going to get there. All right. Big picture, please read through this. There's quite a bit about inflation. I mean, let's face it, Powell all but failed at his job. I am kind of glad that he's coming back. He's not my favorite chair, but at least I know what to expect with him. Well, Kevin, what do you expect from Powell? He's a dove. Probably not going to have 3 interest rate hikes next year. We're probably only going to have 2. But at least we'll get off the books the 140, 160 billion. I think we're at 120 right now, right? 120 billion for backing mortgage-backed securities. Let that go back out to the private market. Agreed. I know what to expect with him. Do I think he's earned his job? Kind of think he's blown it. But he's in again. He's nominated by Biden. At least we know what to expect and how he's going to react in the near future. If things get out of whack, boom, we're going down to no interest rates, and he's going to flood the market with money again. Which means putting 2 and 2 together, we probably don't have that catastrophic pullback that's due for our market. We probably don't even have a correction going into next year of 20% or more because we're going to be so accommodative by our Fed chair. You don't fight the Fed. I don't see how we couldn't. We're so overdue for a real correction. You know, a big doozy, a market crash really is what we're prepared for, or we should expect. But when you pump this much money into the market, it's just not there. For those of you that have been worried about selling your house because we're at the top, we get the BBB pushed through. Probably should have held on. Look to sell your house in a year and a half to 2 years down the road. Prices are going to go higher. Kind of scary. Do read through this to pay attention to inflation. I do like the Y charts, simple market recap. 4th week in a row that the S&P was down, still 20% per year, and I guess it was down what, 3.4% from 2 weeks ago. Just good information to pay attention to. It is a pretty neat. It's my favorite recap of what happens week after week. So that's why I keep putting it in here for you guys. If you ask where I think our markets are going to end this week, my vote is higher. It's pretty funny because Keith took over last week and he said, man, after 3 weeks, I really thought the market was going to go higher. And it was funny because I looked at him and I said, well, yeah, it looked like it was going to bounce off of the 200-day on some, but more looked like it was going to bounce back above the 50-day. And it was funny because Keith was like, I so shouldn't have talked about the market being up 1% next week. Kind of funny. All right, I went through the charts with you. If you ask where I think December's going to be, Keith thought it would be up 1%. I'm going to move it to down 3 right now. That's just where I'm seeing the market moving. I think it could be down to 5 or 7. I already showed you it's nothing more than moving from the 50-day down to the 200-day as we go through some tax selling to get items sold this year versus next year. Really that simple, which is also why we've got some puts on certain things. Earnings this week, we've got AutoZone and Toll Brothers on Tuesday, GameStop on Wednesday, which is kind of interesting. Sportsman's Warehouse, Campbell Soup, Hormel, Lululemon, Oracle, Vail, and Costco on Thursday. Costco we're going to be paying attention to. Kind of a quiet week. The whole week was talked about how we're going to have hot or higher numbers than we expect on the CPI and the core CPI. This is the Consumer Pricing Index. If you're looking to learn a little bit more on what the CPI is, my suggestion is you head to briefing. You don't have to be a member. You don't have to log in. You can just do a Google search for briefing.com economic calendar. And if you just click on the CPI, the reason I like briefing is because it gives you a lot of information, but it also gives you the key factors of the big picture. The key takeaway from the report, aside from the roughly 30-year highs in total CPI and core CPI, is the acknowledgement that the most component indexes increased over the month, which reflects a broadening of inflation pressures. I really like the big picture because it puts it in pretty plain English there. With that said, I mean, you got to scratch your head and you got to think to yourself, the categories, right? All items, food and beverages, man, milk, eggs, and meat through the roof. Housing through the roof. Equivalent rent, rents are high. I don't know much about apparel. I don't know much about transportation, but vehicles through the roof. Fuel through the roof. Medicare, or medical care, excuse me. I know pricing went up this year a pretty penny for a small business owner that has to buy health insurance. Education communications, I don't know. Special indices, I don't know. Core, don't know. Energy, Oh, hell yeah. I mean, we got all those stickers of Biden with his little finger pointing. I did this on the pumps, right? Man, our oil, we have over 100%, almost 150% at some points in time, gasoline prices. And really, I don't know about services, but I can look at the categories and scratch my head and go, yeah, they're up. I can see that they're up. I use these items in different areas that show me, of course, inflation's up. I really like the briefing index to give me an understanding back when I was learning of what these are so important and why these run our futures. Really take a little bit of time for those of you that have done stock market education. Just go to briefing.com, Google search briefing.com, economic calendar, and anything highlighted in blue, click on it, and it gives you a pretty good understanding of why that report is important or not. All right, here we go. Costco reports today. A couple unique. I mentioned this one that Omicron like dominate everyone in the world in 3 to 6 months, the doctor says. Yeah, it's highly contagious. Duh, right? But we also have a comment that the first data on COVID Omicron variant severity is encouraging, meaning that it's not as deadly as the first virus. Let's put it that way. I also feel, and the numbers might indicate, that the Delta variant was not as deadly as the, I don't know, I'm gonna call it the Wuhan, the first COVID, right? Maud or Dr. Gupta, make sure to add in if I'm completely off base. But the good news is, yeah, we've got a variant that's got 50 proteins and 5 times as contagious, but it looks like it's not 5 times as deadly right now. So we're in good shape. Also, Dr. Gupta and Maud, if you got to get back to some of my last commentary or trade findings where I give you guys some credit, and I let the group know that, yeah, when I say something wrong, you guys definitely point out that I'm wrong. You guys keep me under your finger to make sure I'm not talking falsehoods here. Last thing that I just found was interesting. People that are working in the grocery stores feel like they can't afford to buy a cart of groceries. It's kind of a heartbreaking article that talks about a couple people in Arkansas, and I don't know if it's this way all over, but I would suspect so. Read an article about how some people that work in our Walmart, so to speak, our grocery stores that take care of us in that regard, how difficult it is for them to decide what they're going to buy for their groceries. It's again gonna tug at your heartstrings, but yes, we definitely have some problems with inflation, and it's definitely going to affect the middle class, maybe even the lower middle class, or those, it's going to affect my son as he's going to start getting to the workforce. Looks like he's going to get married this summer. Boy, you're going to need a husband and a wife working full time right now just to stick some money aside to even think of getting into a house. And the house is going to be the fixer-upper of all fixer-uppers right now. I really want him just to work on socking away some money. Get out of college, start to sock away some money. And boy, don't have kids right away. Don't get those added expenses. As cute as you think kids are, financially prepare yourself, because I do think they're going to have it harder than I had it 30 years ago. With that said, what questions do you guys have that I can try to answer for you tonight? What questions do you have that I can answer for you tonight? Thank you, William. So, Kevin, are you going to do better next year? That is the expectation. And it's not that I'm trying to blow smoke up your skirt. A lot of what we're in this year were the dogs. A lot of what we went to didn't go up. Did we add thousands of shares? No, but we added a couple hundred here. We sprinkled shares in. I still have a ton of Baidu to put back into place. Thank goodness, we added those shares, 200, 300, 400 shares per thousand for Bank of America. Thank goodness we did it for the year and a half for Ford. So the short answer is we should be looking really good into really doing well into next year for our market. But I'm going to spend, 3 weeks. You're not going to see me come December. Let's see, what are the dates that we drop off here next week? And we will end up taking a break for ourselves. We'll go through this week and all of next week. But on the 16th, Thursday the 16th, will be our last webinar until we join you again on January 6th. So we'll start off at January 6th as a trade finance and adjustments. Hey, welcome to the new year. And we spend Christmas week, we spend New Year's week, and we spend the following week after New Year's getting our licenses renewed and everything. And man, we're going to be pounding. We were probably going to do 1,000 different stocks that we're going to check numbers and spend 15 to 20 minutes on each one to make sure that what we're currently in is still a good position and to look for opportunities going into next year. So the short answer is yes. And David, so you've mentioned Starbucks in the past, but we haven't seen a lot of Starbucks in portfolios. Is Starbucks a price holder? And I think when you mean price holder, can they dictate their price, right? Do they have pricing power? I'm not in Starbucks a whole lot, but from what I saw from their last earnings, minus the fact that China kind of pulled back, yeah, I mean, anytime you go somewhere for a $4 to $6 cup of coffee, I think that's pricing power. Yes, Starbucks is one that we would look to be getting into more of Starbucks next year, but I've got to go run my calculations on it. I've got a couple people that brought Starbucks over that talked about it, that liked it. Starbucks could definitely be an opportunity. And I know some of you, if you take a look at your portfolios, you're cash heavy. A lot of you I haven't put back into Baidu. We've got a ton of cash sitting on the sidelines from Baidu and from Boeing. A couple of you, we switched from Boeing going out to the leaps. We want to take the losses for the year, create a leap opportunity for a bounce back, and we'll go from there. Dr. Gupta, any quick premium generation play to take advantage with volatility spike? Sell some puts using cash on hand? You could do that. In all reality, boy, I really want to do it more often, but if I went back to the VIX, I would really like to sprinkle some VIX calls into play. When you see the VIX get back down to 14, 15, if you bought a call, it used to be it'd go between 5 and 10, right? Like clockwork. You shorted at 10, you'd buy it at 5. Well, now our range seems to be what I would think between 15 to 25. And boy, on a personal level, a couple times that I bought calls on the VIX and then bought puts, I did really well on the VIX this year. But it's a little bit difficult because the Securities and Exchange Commission brokerage houses have a problem with using the VIX as an option in people's portfolio. You want to talk about some type of cash generating, buying a put on the VIX right now at 25 and out of the money cheaper one, or at 27.50, running it down to 20 to 15. You could play the VIX between this range for quite a while right now, and you'd make pretty good money buying those options about 3 months out in time. All I'm doing again is taking a look at the past history, and it'll keep working until it doesn't, right? I don't do a whole lot with selling the puts, because they have to be, usually for the most part, they got to be cash backed, or somewhere between 30 to 50% has to be held in cash to honor those puts. I'd much rather own the stock for a bounce higher than sell a put. But selling a put would be a nice income generating type of opportunity, unless we do get that pullback, right? We do get a 7 to 10. You wouldn't want to have some short puts to create credit or cash credit on a monthly basis. Good questions, you two. Any other questions you guys have? With that said, you guys have a great evening. Jeff Schaffner, your packet has been ready since last Thursday afternoon. I've had it. So I will talk with you tomorrow morning as I get that off to you. And Maud will give you a quick call afterwards. Also, Jeff, I got the charity. In fact, if I can make this outright, if you guys are looking to donate any money to a charity, Challenge Air for Kids and Friends, to help kids in Texas have a virtual flying day and or get to fly with some pilots, go ahead and send me an email. I will send you a link, and it's one of the charities that Jeff Schaffner has been able to introduce me to. It's something that I like to be able to donate to. But Jeff, I do want to talk to you about this tomorrow to make sure you get some credit for it. And for those that might be looking for a charity to make a small donation to, go ahead and Google search Challenge Air for Kids and Friends, or you can go to YouTube, and again, Challenge Air for Kids and Friends. All one word there, Challenge Air for Kids and Friends. And I mean, there's looking for donations 10, 25, 50, 75, 100. If you want to give 1,000, I'm sure they would greatly appreciate it. Guys, have a great evening. Appreciate you being here, and I look forward to talking to you guys on Thursday. Good night, everyone.